On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning team, hope everyone is well. Hope you've had a great week. I certainly have. Me and the family headed over to Melbourne last week, caught AC/DC playing at the MCG on Wednesday night. Epic show. Yep, they're a little bit older, but I enjoyed that just as much as I did when I saw them a decade ago or a decade before that, and Angus Young still an absolute rock god on the guitar, so that was cool. My 7-year-old couldn't quite stay up for the whole concert, but he did manage to last a little bit longer than the previous concert we took him to, and I'm hopeful that when we go on another family trip to Metallica this coming week, he will be able to go the distance. He won't have that 2-hour time difference to negotiate, which is crucial when you're 7. Anyway, I have spent my Saturday morning and afternoon looking at what happened across markets last week, thinking about all of that, taking some notes, looking ahead to next week, pondering what it might mean, what are the key things we should look for, and hopefully you will appreciate that I've done all that work so that you can start the week on the front foot rather than the back foot, and I've made that nice and easy for you. So let's get into it. Share markets, the S&P 500 in the US did actually finish last week flat, although it was a very volatile one, and we have seen some of those higher risk parts of the market continue to fall. So the S&P itself as an index is only down 2.3% from its record high, which came about 3 weeks ago, although the tech sector has fallen a little bit harder than that. It's down 5.4% over the same period. Bitcoin was down 8.5% last week, and Bitcoin is now 24.2% below the peak from last month. So some of those higher risk trades, some of those racier, more high octane parts of the market, that is where you've seen the sell-off take hold. Goldman Sachs actually follow a basket of companies that are favoured by amateur investors, and that fell 5% last week, taking its decline over the past month to 11.5%. So that is where most of the weakness has been. The headlines you're seeing are very much centred on some of those higher risk trades. If you've invested across the board and you've got the entire index, you won't have seen that same level of decline. European shares, Japanese shares had a much better week. They were up 2.4% and 1.8% respectively last week, while emerging market shares and UK equities were marginally higher. The Aussie market was down 1.5%. That's actually its worst week since April, back when we had Liberation Day, and I think that came on the back of rate cut hopes drying up in the wake of a stronger employment report, so we'll talk about that shortly. The local market, the NZX 50, it was also down. It slipped 1%, despite a 15% rise from market heavyweight Mainfreight following its interim result. So the market very much did like that Mainfreight result. Interest rates up in both the US and New Zealand. The US 10-year Treasury yield finished the week at 4.15%, and the local 5-year swap rate finished the week at 3.14%. That's 9 basis points higher. Right, key events last week. So the US government finally reopened. That's good news. The longest shutdown in history, 43 days. The bad news is that some government departments are only funded through to the end of January, and that means that we could have to do all this again in less than 3 months, depending how those tensions within Congress over things like healthcare subsidies and the like develop in the coming weeks. So good news that the shutdown's over. But the bad news is it might not be quite over for as long as we would hope. But look, fingers crossed. Other releases last week, we got some Chinese indicators late in the week. These were out on Friday, a bit softer than expected. Retail sales, industrial production, fixed asset investment, all below expectations. As an example, retail sales rose at an annual rate of 2.9%, but they slowed for the fifth month in a row, which is a longer stretch since 2021. So China is still looking a little bit sluggish, the world's second largest economy. Across the Tasman, the key release was the labour force report, and this was for the month of October. It was better than expected. The unemployment rate fell further than expected to 4.3 from 4.5 in September. So people expected it to come down from 4.5 to 4.4, but it came down from 4.5 all the way to 4.3. So better than expected. That's good news. A stronger labour market. However, the reason the market took that badly, it's a bit ironic, isn't it? Good news is bad news from the market's perspective, is because it means that a rate cut from the RBA in December looks even less likely now. In fact, I think there's no chance of an RBA rate cut in December. And even looking into early next year, with inflation a little hotter than expected and the economy in decent shape, the RBA might be on the sidelines for a little bit longer. So that makes for quite an interesting dynamic, particularly with our central bank, the Reserve Bank of New Zealand, still highly likely to cut the OCR again later this month. So that divide in terms of the interest rate differential, and this plays into currencies, the Kiwi dollar sort of 86, 87 against the Aussie dollar, the lowest in a long time, that might prevail or persevere for a little bit longer. Looking ahead to this week, and I think the key thing that we'll all be watching for are some of those delayed US economic releases to come through. There's a list a mile long of all the reports that we didn't get during that 43-day shutdown. One of the things that we know will come out is the September jobs report, and that's because the BLS, the Bureau of Labour Statistics, has told us so. So that is due Thursday. That's good news. This is one of the easiest reports for them to release because the data collection for that period was actually completed just before the shutdown began, and then the shutdown obviously happened, so they just didn't release the report, but it was sitting there ready to go. So we will get that one on Thursday. We also missed the October jobs report, and I'm not sure if we'll see that. It might emerge, but if it does, I think it will be missing some elements. We'll probably get the payroll numbers, but not the unemployment rate, because no one was there to actually do the survey for the unemployment rate. The White House has also said that there won't be an October CPI report, so we won't get the inflation report for October. So we'll get a couple of things. This new data will be helpful. That September jobs report will be useful, although it's much more backward looking than usual because it was meant to come out 6 weeks ago. So the Federal Reserve, in a little bit of a bind, they will meet for the final time in mid-December, and odds for another cut are sitting pretty close to 50%. So markets see it as a coin flip. One of the reasons for that is because they've been in a bit of a data void. So markets are questioning whether the Fed will feel that it has the confidence and the information at hand to actually cut rates again, because if they don't feel that they have that, maybe they will be inclined to just sit tight and do nothing. So again, you've got a bit of a divergence there, haven't you, with the New Zealand Central Bank highly likely to cut rates again, fully priced, and in Australia there's no cut coming until next year sometime, and in the US a bit of a coin flip. So a really interesting dynamic when you look at central banks across the world. Also next week, flash PMIs for November, and this will be really up to date. So this will be a really useful one because these will cover the month of November. We'll get them for Australia, Japan, the UK, Europe, and the US. Not out till Friday, so you'll get the Aussie measure and the Japanese measure throughout the day, and then the UK, Europe, and the US come through that evening and sort of into the early hours of Saturday morning. So this will actually give us a good read on where the global economy is. So those flash PMIs for November are something that I'm watching quite closely. What else will we have this week? Here in New Zealand, we'll get the latest housing report. That is out on Monday morning. This will cover the month of October. Seen a few green shoots lately in terms of activity, in terms of prices. Very much early days, but when I talk to my real estate agent friends, they are telling me that inquiry is building. Things are looking a little bit more optimistic out there, and they do feel that things are turning a corner, as you would expect, with mortgage rates having come down as far as they have. So we'll see if this comes through yet in those October numbers at 9 a.m. on Monday morning. We'll also get the results of the latest dairy auction on Wednesday, and This will be really interesting because dairy prices have been pretty soft lately. They've fallen for 6 auctions in a row, and they've fallen at 10 out of the past 12 auctions. So we actually haven't seen an increase since early August. It's a little while ago now, isn't it? So prices are off about 15% from where they got to in May. They're down about 7% year to date, and that $10 payout that economists have been expecting from Fonterra starting to look maybe a little bit optimistic. We might be in the nines, and I think if you get another weak auction this week, you will probably see some of those economists move in terms of their forecasts. And again, thinking back to the currency and interest rates and so forth, there historically has been quite a correlation between dairy prices and the Kiwi dollar. So you add that into the mix, in addition to the fact that we're still cutting interest rates, the RBA is on hold, the Fed is unsure about what it'll do, markets sort of see it as a 50-50 call, throw in a weaker dairy price and you could see that pressure remain on the Kiwi dollar. So that will be interesting on Wednesday morning. Last but certainly not least, there is an awful lot going on the corporate earnings front. So we'll start here in New Zealand. We had a couple of heavyweights last week, Mainfreight, Infratil releasing results. More to come this week. The smaller end of town, but still some really interesting businesses. Serco, Napier Port, Goodman Property Trust, all releasing results this week. Also some AGMs, which means we might see some trading updates. Precinct Properties, KMD Brands, that's the old Kathmandu. A2 Milk, that's a big one, Sky TV as well. So lots to watch here in NZ. Across the Tasman, we've got a James Hardie result, we've got a Seek AGM, ResMed AGM, Sonic Healthcare, so lots to watch as well. And internationally, another really, really big week, not in terms of the volume of results, but in terms of one really, really important result. Nvidia releases its result on Wednesday in the US after the close, so that will be Thursday morning New Zealand time. Really important one. And with all the talk and focus on the AI sector, the tech sector, is it overheated? Is it overvalued? Is there a bubble brewing? All of that debate, and no one really knows the answer. But I think the Nvidia result will go a long way to, at least in the short term, answering some of those questions, because if it's a good result, then it will support share prices where they are, and you might even see a bounce because Nvidia has softened a little bit lately. If it's a weak result, it will fuel that debate that AI trade has maybe gone a little bit too far. So a really important one to watch in the US Wednesday or Thursday here in New Zealand terms. A couple of other results internationally as well worth a look. Home Depot, Target and Walmart all reporting in the US. These will be interesting because we have had that data void. So there was a retail sales report or two that we didn't get, and some of these big heavyweight retailers might be able to fill that gap in terms of information about how the US consumer is looking. Palo Alto Networks as well on Wednesday, Intuit on Thursday. So lots to watch. I think that Nvidia result will be the big one, but I will be particularly interested in the house price figures and the dairy auction results here in New Zealand. So thanks very much, team. Enjoy your weekend, enjoy the week ahead, and we'll talk again soon.
For more insights, visit craigsip.com.